Software is pretty much just crashing down right now. Today, ServiceNow, they reported earnings last night. They're down 15% today. It's taking the whole sector, all the software companies down. Even Salesforce is down 8% just because of the earnings from ServiceNow, which I think is very specific to ServiceNow, at least what the concerns are right now, even though they're doing great in my opinion. So we pretty much just flipped the account. In one of the previous videos I did, we were in minus. I started this account when I built out my stock sentiment software, which is just a research tool that I'm using for all my analysis, everything that I'm doing, and I'm basing my investments based on what I think about the future, but also just a few fundamentals. I'm not trying to drive it down to 3 decimals to be able to think about, is this a good investment? I have a system that I'm following, and if the boxes tick out, I can pretty fast make a decision if I want to invest in this company or not, because it might not be a good investment if you really have to dig into it really, really deep, find every single detail, go down to 3 decimals to be able to determine if it's a good investment or not. Then it's not an investment for you. So let's talk about SaaS stocks. I've been buying ServiceNow today, been buying Salesforce in my private account. I should also buy a bit more here in the public account. Adobe, gonna accumulate a bit more of that. They just announced buyback 25% of the company over 5 years or 4 years. So this is pretty much a $25 billion buyback, which is the same as 25% of the company at the current levels. So the earnings per share is going to be boosted like 33%, even just from this buybacks they're going to do. So let's cover ServiceNow in this video. I'm going to talk about it because they're crashing like 15% from the earnings, but it pretty much just applies everything that I'm talking about across the full software space. So we have the disconnect score here, depending on the sentiment, the fundamentals, and also the valuation. So it looks like we have very good fundamentals. We have good sentiment. We also have valuation, which is undervalued. The sentiment doesn't have to be good, because we can have good sentiment, we can have good fundamentals, and we can have undervalued. We don't want this to be overvalued. Then we definitely don't want to have it as a buy. But we can have good sentiment and still be a bad buy. We can have bad sentiment and it can be a good buy. The main thing that we're looking about the sentiment is how is price acting to the sentiment. This is very, very important distinction, but also just tracking what stages, what different states are the sentiment going from. Is it going from bad to good? Is it going to neutral? Is it neutral for a long time? Is it going from good to bad? So this is very, very important, because we can have bad sentiment, the stock going down, the fundamentals staying up, the valuation going down, and then it's transitioning into good sentiment. We still have good fundamentals, but the stock price is not following, and we will have a high disconnect and a strong buy in here. So we can see the stock price. It's already down here to 80 today from the earnings. So $80. It's almost back to after the full pullback in 2021 after the crisis. And we can see that it has pretty much just been going up, but now we're set back all the way to like 5-6 years at least, and the company is doing better than ever. So if you look at just the sentiment here, we have some key factors. It's a mature company. Should have the key points down here. We have the sentiment themes for the different tweets, Reddit. It's scanning Reddit, X, all different news articles out there to try to find the sentiment. It's doing that every week, generates a summary, it tracks the earnings, so the earnings history over time. It generates a summary list of each earning call, and then it tracks the problems, the progress that they're doing on specific things. Are they mentioning across different earnings calls, and what they're promising one earnings calls? Do they actually address those problems or what they're saying, and following through with it in the next quarters. So this is very, very important. I'm looking into that a lot because I don't have time to sit in there, read every single earnings report for all companies, maybe in the companies that I own, but not in companies that I'm interested in and have in my watch list. We have the key metrics. So we have a PE ratio for a PE of 24. This one here is not updated with the news numbers. Profit margin, also very good. We have revenue growth of around 20%, and we have a market cap of $100 billion. If you go inside the sentiment, we can see that it's starting to go up a bit. It hasn't been updated today. It might actually go down, or even not, because I think that the sentiment is not bad around the earnings. It's just they missed on some specific key metrics that Wall Street is looking at, for example, like profit margins, but I think there's reasons why the profit margins are going down slightly now. They're still great, but they're going down slightly for the next quarter. So key themes: AI fear. Like there's so much AI fear out there. Every time Claude and Fabric launches a new model or feature, all the software companies are going down, but I think it's more a tailwind for those large companies, because maybe a few guys, I'm a software engineer myself, we can build out apps, we can build out systems, like our own personalized software, but if you are like a full enterprise system, you can't just have a team of 10 people vibe coding your own ServiceNow solution, like your full IT infrastructure, your ticketing system and all that. There's no reason to risk any of that. There's no reason to do it compared to just using ServiceNow. The switching costs are high, the retention, like ServiceNow, even though AI has been out for a long time, like they still have 97, 98% retention rate. So once they have a customer in there, they're pretty much never leaving them. You can see the week by week summary in here. Definitely going to check out the software. Like if you're following a stock, you just get the highlights every week. So for example, April 21, retail on X hyping now dip by. We have some analysts cut price targets, stock is up 3%, Reddit threads call now undervalue current levels. So you can go through step by step. You will just get the key highlights that has been mentioned about the stock on X, Reddit, and different newspapers. But the most important thing about ServiceNow is just look at the earnings per share. This, at the end of the day, stock price, it tracks earnings per share, tracks free cash flow per share over time. This is how much cash they're generating per share to the shareholders, and this is eventually what everything is about. So we have very good forward PE ratios coming down now around like 20-25 PE ratio for this company. It's starting to be into the more mature space, but if you can go revenues at 20%, you definitely deserve a PE ratio much higher than 25. Maybe if they're down in like single digits, high single digits, 10 to 15% revenue growth, really also depends on the profit margins and how much earnings power they have. But if you just go down, I usually just look at the annual trends for the EPS, the revenue. I don't really look at the quarters. I'm thinking out in the future, seeing I'm investing for long term, like next 3, 5, 10 years. And one of the good indicators of if you should buy a stock is pretty much just like look at how it has been doing in the past. Like if you want to hold a stock forever, then ask yourself the same question. Like I look at this graph, how has it been to hold the stock forever? Because that might be the best indicator of how it's going to be in the future, holding it forever as well. At least in extraordinary companies that has a long track history. Maybe not if some stock has just popped up in a bubble in a year or two. It might not keep going on for the next 40 years. But if you have large like companies like Coca-Cola, big healthcare companies like UNH, I'm also starting to get into that position. Earnings per share trend, you can see how it's going up, and the stock price is back to 2020, 21, 22. If we just say 2021, we have 1.20 earnings per share, and if we go back here to 2025 now, we have 3.5 earnings per share. So we pretty much have like a triple in the earnings per share while the stock price is still at the same level. Might not be growing as fast, there might be some uncertainties about the future, but is it really justified in this stock price? You can see the quality of revenue and profit going up 5-6% every single quarter, and at the end of the day we have 22, 21. You can see here we have growth rate at 30%, 23, 24, 22, 21. So it's starting to slow down a bit. Maybe they can reaccelerate it with some new acquisitions that they have done, and also just integrating AI features into it. But even if they just only grow at 21% now, or even go down to 15% revenue growth in a year or two, or even further down, they're still going to do very, very great over time. And the reason why they can keep the revenue up so high and it's so consistent, because the retention, like it's very, very predictable company when you have 98% retention of your customers. So this is a very, very predictable business, and it's doing good. There's not really uncertainties about that. All it comes down to, in my opinion, is pretty much just the AI fear. This is one of the best SaaS software, like enterprise level software companies out there. I work in different software companies out there, people with 3, 4, 5, 10,000 people in an organization, and you're not just going to swap out some software because someone on the team has vibe coded something. Maybe there's a small little feature that they can use and vibe code a solution for, or like a smaller team that builds something out, but we're not talking about like the full IT infrastructure, the full agent system and all that. It's not going to be built out with just a vibe coded team with Claude Code. So Claude Code is not going to run any IT infrastructure. It's going to help it. They're going to integrate agents into ServiceNow. Even Jensen Huang, the NVIDIA CEO, has also been saying this in a few interviews. So yeah, it's very, very predictable business. I'm really not scared of AI in the future. Like, I'm using Claude Code for everything, like all code that I'm doing, but I'm working in smaller teams on smaller features in existing enterprise software systems. And like all those companies like Palantir, a lot of other enterprise softwares, they're growing like crazy. They're still landing deals. Why would they be landing deals for hundreds of millions of dollars? If you can just go in there and vibe code your own solution with a smaller team, it's going to be more efficient. You can customize it more. It's just not possible. It's not going to be in the future. And if it's going to be, I think that just ServiceNow and these software companies, they can utilize it even more. Yes, they might lose some, if for example, like Salesforce with the CRM system, ServiceNow, they have some CRM systems. Maybe some people, if you have like a single person business doing like a hairdresser, you might not have like Salesforce as your CRM system, or if you're a smaller business, maybe you will not use ServiceNow compared to just vibe coding your own solution. Maybe you will, because it's still just cheaper than like spending your own time doing it, running into a lot of problems and just making sure that it works. Because just the slightest uncertainty in non-technical people, if the system works, oh, do my booking system work? Oh, maybe why I'm not getting any clients is my booking system not working because I vibe coded this. Oh, now I'm getting into this error here. I have the deployment error. I have all these different bugs. Like, there's just going to be so much uncertainty around people compared to just paying for the CRM system that already works. And they have all the AI features integrated because they're the biggest players in that space. They have the most knowledge, they have the most data, they can make the best decisions. Like, they're usually the ones making the products, figuring out what problems do people have and then solve it. And I think they're just going to continue be even better at doing that, but they're going to be having a tailwind of AI. So they're going to use AI to help themselves be able to develop faster, minimize the cycles that they need to take on iterating, making new features in the product. They also just have AI agents sitting at the front. Both Salesforce, they have agent force. ServiceNow, they have AI agents. You can build your own AI agents on Salesforce software too. So this is really, really important. And everything is crashing now because of AI fear, but I think it will actually be a benefit in the long term, even short term, but especially in the long term, it's going to be a very, very big feature, and it might even be able to make the gap even larger. So you would think that the way, like, this is some of the thoughts that I'm just doing when I'm getting into businesses like technology, healthcare, when you're doing an investment, that sometimes just think about the logical things and just try to do counterparts for every single thing that you're thinking about. So now there's AI fear. What's the counterpart for that? Okay, maybe it's a tailwind. What do you believe in? Like, at the end of the day, you have to put your money where your mouth is, what you believe in, not what someone else believes in. You need to find opportunities. You need to find something that you believe in. And when you're on your deathbed, like, you would way rather look back at the experiences. You lost a little money here, then you made a lot of other money because you really believed in this company. Maybe you lost 5 bets. You got one home runner that made everything back. It made you rich because it was something that you really believed in. That's also just some thoughts that I'm doing with my investments, thinking about how I am as a person. What do I believe in? And it's just a very important part of investing for me, because it just comes down to, are you able to hold it through the drawdowns? Are you able to hold the stocks when they're crashing down? Are you able to buy even more stocks even though you're losing money? Okay, maybe 1 month, all the money that you make in 1 month, you have to take it. You don't go out there, buy a new car. You don't go out there, like, get a new house, new computer. You put that money into stocks that is pretty much just losing as much value as if you just bought the car. Like, you probably say, I've said this myself like many times, oh, I could just 3 months ago have sold my stocks and then I could have bought a new car. Instead, I lost a car, now I'm putting more money in, I lost another car. and it just keeps going down, and it hurts even more. But this is really where you need to be confident in your choices, and also just have your heart in it. Like really just have your heart in the investments that you're doing as well, because it's going to make it easier. Don't marry your stocks, but really just be objective and think about the long term. So this is some considerations that I'm doing as well. And I had the point where I pretty much just wanted to go over the counterpart to AI being a tailwind, or making the gap even bigger between smaller and bigger companies. Because smaller companies, they might not go out there and have like a small company being a disruptor to Salesforce with 200 people trying to build out their own custom software, because there's not going to be funding for it. A lot of people, like, they can't vibe code in that environment, or they're vibe coding it and you can't really build something very good if you're 200 people just vibe coding your own system, or even just 10 people vibe coding in the same system. And if you're just a single person, like, you're definitely not going to beat Salesforce on any product. So I think there's going to be less disruptors to the big companies. There's going to be more in smaller teams creating individual software for themselves to make them more efficient. There's going to be more hairdressers making their own CRM systems. But at the end of the day, like, that's not where the money is made. The money is made at enterprise solutions and enterprise software. And for them, the switching cost is too high. The risk is too high. Like, there's no reason for them to risk any of that. Okay, maybe they can make a little more money. They don't have so big capex, but at the end of the day, like, they can lose so much more if it doesn't turn out to be a good decision. This is pretty cool. This is how I'm thinking about it. You can go through the software, take a look at the things that I have in my public portfolio. In the videos, I'm just going to talk about my thoughts, my considerations, how I'm feeling, where I'm seeing the future is heading, because that's how I make my decisions. I look at it, find good disconnects with my research tool, think about where I think the future is heading. We're going to cover Adobe as well. A lot of people think the whole world is going to be AI generated. I have a lot of counterpoints to that, so stay tuned for those videos. And there are so many other different fears out there right now where I just think it's the complete opposite. It might even accelerate it, but it's not justified that stocks are crashing down like 70-80% from the highs, and people think that they're just gonna go under. Stay tuned for those. Like, it's very interesting talking pounds. I can talk and keep speaking forever about those things. Adobe, like, AI generated. There's no way in the whole world I'm sitting here coding in Claude Code now every single day, 10 hours, just sitting in a terminal, typing, writing to a robot. Imagine we have Optimus, some other humanoid robot, like, running around making our food. We go to Netflix, everything is AI generated in there. We go to the gym, we see AI generated ads. I just don't see a future where people would want to watch AI generated. Like, everything is just AI generated, everything is AI controlled, you don't have to do anything. I really just can't imagine the future like that. And that's why I think, like, Adobe, for example, it's not going to go anywhere. It's not going to be disrupted and go towards zero. We're going to cover that in much more detail in another video. It's just so exciting for me. Hope you guys want the upcoming videos. Until then, happy learning.